Candles, fibs, crosses, EMAs. It's the tools of the day trade. Don't be a noob and trade on websites that don't give you BitBoy bonuses. Click the link in the description to get set up on Bybit or Femex and get an insane sign-up bonus for being part of the Bit Squad. Leverage trade responsibly, but do it the right way on Femex or Bybit. Bonus details in the links below.
BitBoy Crypto Morning TA. Good morning, everybody. It's October 6, 2021. My name's Piano Matty B. That is Scaramucci's. And this is your Morning TA. A brief glimpse into the crypto markets, where the sun's shining, where the wind's blowing, all the humble opinion of this piano. Zamboni, bringing the data. The FOMO index has climbed to 68 from yesterday's 59. Bitcoin dominance is at 44.1%. 24-hour volume is at 121 billion, and the overall market cap is 2.19 trillion. Give or take 100 million. Over on the 4-hour chart, we see price actions following our plan we discussed yesterday to the letter so far, with a pump up and over 51K, peaking out at 51.9, then coming back for a retest of the 50. Now, we said we may see a dip under 50, and that would be a classic overcompensation on Bitcoin's part. But we know that Bitcoin is a melodramatic overcompensatrix, if it's anything. So don't be surprised if it does. Be disappointed, but not surprised. It may overcompensate itself down to about 49.5-ish before pulling up its big boy or girl pants, I suppose, and returning back up. This 51 level is not only the goldenest of golden ratios, but it's the killing floor for whale sell-offs, where they systematically take profit like clockwork, because they know it's the beginning of premature FOMO or early onset fear of missing out, where the excitement reaches new retail traders and they buy into the frenzy. Now, it's not the end of the world if we see a dump here, because it is such a huge killing floor for whales. But we need to have a fast rebound in order to maintain market momentum. And at 51.8, that is what one can call a lower high from our last high. Let's take a look at that over on the daily. Why not? Now we can see over here almost a month ago, we had this high of 52.3 and this massive dump and subsequent doldrums in the weeds for all of September. And we have made a lower low slightly, but a lower low is a lower lower. And there's no getting around it. We see this retracement comes with low volume as well, which leads me to believe it's the handiwork of a handful of whales, opposed to the accumulative market sentiment. However, this level is also what I call the husband's promise. We're after a bout of premature FOMO over at this peak. A lot of retail traders had to promise their significant others that when the market comes back to 51-ish, they'll sell, make their money back and break even, and put that money right back into something more speculative and risky, like the prospect of actually making their significant others happy by listening to them, which has an upside percentage of 28%. Oh, my trading point Dexters have corrected me. They say the upside percentage of making your significant other happy by listening to them is actually 6%. They also added that if you believe that things or people make you unhappy or happy, you are wrong on both, as you alone have always, and always will carry the keys to unlock your happiness or unhappiness. It's a choice, not a reaction. Well, thanks, guys. I appreciate your input today. Now scram. What I'd like to see pan out today is a dump. And you know what? I'm going to stop using that word because it's just not accurate. It's a flushing out of weak hands, if I may be so bold. Let's call it a flush. Yes, a flush. I'd like to see a flush down to 49.8-ish. And I don't want to close the candle lower than that at risk of creating a bearish engulfing candle, which would have high probabilities of continuing lower, which I just wouldn't like to see this week. I just don't want to see it. My friends, once we get back up and over 51, which is what this healthy pullback should do in a perfect world, 51 becomes the whale's new killing floor buy zone. Because in an ironic twist of financial contrarianistic logic, the whales respond to market support and resistance. So in effect, when they sell into buying pressure, they realize that resistance has become support, and it's time for them to accumulate rather than sell, which begs the question: if huge moves are made by huge whales responding to market support and resistance, who is actually controlling the whales? Good question, and thanks for asking. Finishing up on the weekly, we see a slight uptick in the MACD. Nothing to write home about, but it helps to diffuse this negative divergence we see as price action has gone up. The MACD has stayed flat and, dare I say, gone down. But this slight uptick could be the Kobe Bryant head fake that catches the whales with their pants down, corrects the divergence, and sends her to the Upper East Side, where we'll finally get our piece of the pie. So remember, we're playing the same game as our psychopathic elected lead. That's right, it's a long game. So zoom out and have a fantastic day. BitBoy Crypto Morning Tea. Hey, oh. Ching.